Luan, I've seen the not shaving gets to all of us.
Stay morning, how are you?
Good on you.
Yeah, I already got flack this morning for not shaving, but yeah, my razor is in lockdown now, so yeah,
Yeah, lots of
how's
things have changed from now onwards.
absolutely how's things on your side?
Good, thank you.
Good stuff. So there is still a few people trickling in, so if it's okay with you guys, just going to give it maybe another minute or so before we actually start.
Yeah, sure.
Okay, so everybody has been cleared in the waiting room, so I think I'm going to start on my side, guys. So you've been following the webinars that we've been presenting from a SARS relief perspective. Now, this one took us a while to actually get finalized, and the only reason why is it seems like every other day the UIF office is making changes to the legislation. So we've literally had to redraft this presentation 3 times now. And I'm actually silently holding thumbs that as we are presenting, that there isn't any late changes. The latest update actually came through last week as I was finalizing the slide for the 3rd time. So this is as current as we've currently received it from the UIF office. Obviously, the President's announcements last night may have a bearing on this specific piece of legislation, and we'll update you guys accordingly. We'll obviously post any notices on the closed Facebook group, and we'll also make sure that those announcements go out on our weekly newsletter that's going out. And then also just take note that we are going to be presenting a new updated SARS webinar next week, with the updated percentages and updated legislations on the relief on the company corporate tax as well as the PAYE. So you all probably know by now what the TERS legislation refers to. That is a temporary employers relief scheme, specifically pertaining to the COVID-19 pandemic. And this is something that has now been implemented literally as part of the lockdown. So you'll immediately see that pretty much the same parameters apply as the ones that we've discussed during the SARS webinar. You still have to be an actual contributing employer. In other words, if you've been registered with the UIF and you've been paying over the UIF either via U-filing or via your SARS EMP 201 on a monthly basis, you are eligible for claiming. A critical one here is the employer must have been affected in some way. So either that has been a full closure or at least a part closure of its operations. And there's a piece of legislation that they've updated after the initial announcement, and that is they're talking about a distressed employer. Now, distressed initially meant that you had to be physically closed down. And what they then later said is they will be excluding a lot of companies that may still be suffering, but not due to 100% closure. So they've broadened that definition, and they've now said that a distressed employer will then obviously include someone that has literally not shut down completely, maybe trading to a large extent, and then obviously also the employee that works for that employer has also been brought into that definition. And that definition now stipulates that in the case where an employee still receives part of his normal monthly salary, but not his full 100% gross, he will also still be eligible for a claim under the TERS legislation. It's important to note on this specific segment, unlike the SARS stipulation that indicated you have had to have been a contributing employer by the end of Feb 2020, they've extended the prerequisite on the TERS legislation up to the 27th of March, which means that if you, and this is our understanding, if you are a new employer that have registered during Feb maybe, or even March, and have already started contributing in month 1, per implication, you will still be eligible for claiming under the TERS legislation. An important factor to note here, and I've had a few discussions with certain clients already around this, it's amazing how South Africans always get fairly creative when we're on the back foot. So it's important to note here that the TERS legislation and this refund is not applicable to any other sort of cash flow measures except for the recoupment of salaries paid to your staff. So practically speaking, what that means is I know there's a few clients that have already started discussions with us to try and figure out if we want to pay our staff, month end is approaching, how much do we pay them? Do we pay them their full salaries and then claim under the TERS disbursement, or do we only pay them a certain amount? It's important to note here that in the case where you decide to pay your staff 100% of their salaries right now, in the hope of then claiming from TERS and then using that disbursement to pay suppliers that you can't currently pay because you've paid your staff, that's actually going to land you in hot water, because at the end of the day, you need to be able to send the UIF office a reconciliation of where the actual money that they paid into your bank account, where those monies have actually been disbursed to. So in that scenario, we must just please ensure that we allocate this money specifically only for salaries. So having said that, the value of your benefit, there's an actual cap on the gross monthly salaries for qualifying distressed employees. And the UIF office has capped that at 17,712 Rand per month. And there is a sliding scale that will be applicable to any of these disbursements. Now you'll see the indicated parameters there are anything between the lowest threshold of 38% of the employee's gross salary up to a max of 60%. So what that actual sliding scale would look like in between those two thresholds, we actually have no visibility of that because the tool on the UIF website has not been made live yet. So it's our understanding how that'll work is when you submit your application, you obviously, and we're going to get to that in a slide or two from now, you will need to disclose your normal payroll to the UIF office, and based on each case-by-case basis. Guys, sorry, there's a client that can't get in, so if you wouldn't mind me just quickly answering her so that she can get in, then I'll be happy to continue. I'm going to have to quickly see if I can invite it out of the system directly. My apologies, guys. I just quickly need to send this to her. Okay, I'm hoping that will work. Just confirmation, everybody can see my screen again? Just a thumbs up. Happy, cool. So what that sliding scale will look like, we actually don't know at this stage. So the way that it's going to play out is when we submit our applications to the UIF office, it'll be treated on a case-by-case basis. In other words, each employee's actual salary will be then determined on that sliding scale of the actual amount that will be refunded by the TERS program. So it's a nice indication to at least start making some calculations When you are, in other words, looking at a staff member that is earning towards a lower income level, the higher percentage will apply, in other words, up to a max of 60%. And in the case where we are working with employees on a higher income level, the lower threshold will apply, which is then the 38%. Also something just to note, the calculated benefit from TERS may not be less than R3,500, which is the national minimum wage. So in the case where we've got a lower income level individual, and we do their calculation, and the TERS benefit actually comes to an amount less than 3.5, it'll automatically revert to the R3,500, just to make sure that we keep in line with that piece of legislation there as well. So let's look at a few examples quickly. So in the case where an employee's salary is more than the maximum threshold, the 17,000, let's say this individual earns 20,000, the employee would receive a percentage of that 20,000, or rather qualify for a percentage of the 20,000, but will not receive anything more than the 38%. So again, when we start discussing any cash flow in the next week or so, and this obviously includes us as company owners that are on the payroll as well, my suggestion is to use those percentages and work that into this month's payroll to see what you can pay yourself so that we keep in line with legislation. And then obviously once we submit our TERS applications, the percentage benefit that's being reimbursed should then make up the deficit on your salary. So yeah, it's also quite important to note, Kathy and Fiona, I think you guys can recall the conversation we had last week. When you guys spoke to us about how do we calculate an amount right now that we can pay our staff so that their debit orders can go off and stuff like that. At that stage, we couldn't give you an answer. We still can't give you a rand and cent answer, but what we can tell you is, again, I think let's use the percentages and work on a scenario where if you've got staff members that are earning to the lower threshold, apply the 60%. And if you've got staff members that are earning towards the higher threshold, apply the 35%. And that's going to give you a nice thumbs up calculation, at least to get the ball rolling. And we'll obviously need to reconcile that once your TERS refunds are dispersed. So from that perspective, it's obviously also quite important to note that the staff member is not allowed to earn more than 100% of their normal gross salary through the application of the TERS and the part payment from the employer side. So how that would typically work is if you earned 10,000 Rand per month and I'm going to give you an upfront payment on your salary for April of 5,000 Rand. By the time that the TERS disbursement comes back into your bank account, I can't all of a sudden now earn 11 or 12,000 Rand. The UIF office will actually then, as part of its monthly reconciliation, we as the employers need to do, we're going to get to that in a slide from now, we then actually have to reimburse them for any monies that they've paid to us and that we've disbursed in excess of the actual complete gross payroll for that specific month. So just important to note. So a caution, or let's rather say caution to the wind in this scenario is tying up with the distressed employer scenario. Again, it may be advisable to pay your suppliers first, because at the end of the day, when you submit your application here, you have to be able to prove to the UIF office that COVID-19 has had a significant impact on your business from a cash flow perspective. So if you are going to be running your full payroll for the end of April, maybe even May for that matter, the chances of your TERS application actually being successful is virtually zero. Because from their perspective, what they see is, yes, times are tough and the economy has taken a significant hit, but this employer somehow managed to pay his staff their normal salaries, obviously disqualifying that employer under the distressed employer clause. So make sure that we do proper cash flow planning for the next month or two, and make sure that you apply the money that you've got available to the correct channels. If there's no supply payments, obviously, because operations have stopped completely, then Bob's your uncle, the money's in the bank. Then it becomes a question of how much do I actually pay myself so that I still fall within the parameters of this section of the Act, so that by the time that the TERS application is successful and they refund us a percentage, that I'm not earning more than 100% of what I would have otherwise earned. So a few examples of how that benefit calculation would look like. So we're looking at 3 examples. On the one side, an employee earning 20,000 a month, then the same employee earning 10, and then another employee earning 5. So there's 2 scenarios for each. On the one side, we're starting where the employer physically cannot afford to pay the staff member anything. So there's no money leaving my bank account as part of the payroll for April. So in this case, because this person earns more than the allotted threshold of 17,000, the benefit will be capped at that. And because he's also earning on the higher income level, the 38% will be applied. So the maximum benefit in this scenario would be 6,730 Rand that TERS would be dispersing. So now you guys can see that we can do a nice calculation of what the deficit would be. So this individual will have a shortfall of roughly 13,000 in this specific payroll month. If the employer, however, is able to pay 50% of that normal salary, in other words, the 10,000 Rand, the benefit is now still based on the 17,000, but there is now a different percentage that will be applied. And again, you guys will remember I just spoke about the ratio tool that the UIF office is making live on their website. So that tool will then indicate the actual percentage which will be applied to the 10%. So in an example, let's say they deem this employee to be eligible for a 45% disbursement, there is a possible benefit of 4.5. And now we can compare apples and apples with one another to see what would be the best plan of action as far as do we pay our staff or do we simply just apply. Then there's an employee that earns 10,000 Rand a month in the same scenario. This time he's under the threshold of 17, so the full 10,000 is eligible for a claim. And we're using the same example of the 45% in the previous example. So there's a possible benefit of 4.5, and you guys will see they're all possible because at this stage, nobody knows. Then let's say that the employer is able to pay him 50%. So now, again, the 50 or the 5,000 Rand is still under the threshold, but now it leans more towards the lower income threshold, which means there's a possibility of the percentage being increased closer to the 60%, if not the full 60%. So again, in this scenario, there may be a possible benefit of 3,000 Rand, but obviously that will revert to the 3.5 because remember, it can't be less than the minimum wage in South Africa. An employee earning 5 a month, we can't pay him anything. So the 5 a month is completely eligible. It's towards the lower, which in this case, there will be a definite higher percentage applied to the benefit because the same rules apply and the benefit will only be 3,000 Rand. It'll automatically revert to the higher 3.5 minimum wage. And in the case where the employer can pay him 50%, now there's only 2.5 that's being included in the percentage claim. 60% will most probably be applied. Now there's only 1.5 in this scenario that will be disbursed, but again, it'll automatically revert back to 3.5. So you guys can see how it systematically moves towards a point where the lower our employees earn, the closer to actual break even they come on that 3.5 minimum wage. The higher that people earn, the possibility is there that there's a bigger delta that they will be short on their cash flow for the month in that specific payroll. So obviously, just keeping in mind that there is the possibility for staff members to claim both under the TERS as well as the UIF, because if you are completely shut down as a result of COVID-19, there's no reason why you can't have an application under the UIF, in other words, the proper unemployment insurance fund, and then also applying for benefit under the TERS, because this is an employer scheme. This is not a staff member scheme. So UIF is there to look after the employee. So if they are affected in any way due to COVID-19, they are very welcome to go and claim under the UIF legislation. But you as the employers are then permitted to also claim under the TERS, because remember, the higher the people earn, the bigger the deficit, and we need to try and make up that deficit somehow. So if you are completely shut down at this stage and can't pay them anything, where's the money going to come from? So that's typically why the UIF office is there in the first place. So how does the benefits work and who will be paying that? So there is a memorandum of agreement that forms part of the of your actual submission. And it's a mandatory field. You have to actually enter into that memorandum of agreement as the employer if you want your application to be successful. So obviously that memorandum of agreement in normal terms would constitute an actual contract. That's why the stipulations that we're going to discuss in a few slides from now becomes quite paramount, because we can't simply just enter an application, receive the money, disperse it as we want to, and Bob's your uncle. There's actual requirements from us as the employers to keep proper track of how we apply, what the monies are that we are receiving, and how are we then dispersing that. And it obviously needs to be dispersed to a point of zero being left under that claim. In other words, if there is 50,000 that comes in, but I'm only refunding and dispersing to my staff members, let's say 45,000, the 5,000 remaining in my bank account is not now money for jam. It's actually something that needs to be reimbursed to the UIF. So this memorandum of agreement is quite an important stipulation there, and we must just make sure that we are actually signing a legal contract and we are entering into an agreement with the commissioner from the UIF office. So as soon as that memorandum of agreement is signed and the UIF office has paid the money into your account, you have to then disperse the cash to your staff members within 2 days from the date that you received it. If you belong to any bargaining councils, in this scenario, the UIF office will actually be paying the bargaining council, and the bargaining council in turn will be administering the payments to your staff. So this completely bypasses your books. And it's also important to note here that your staff members won't receive the money directly from the UIF. The only exception to that rule is in the case where you've got less than 10 employees, and looking at the audience, I'd say 90% of the audience falls within that bracket. So in that scenario, we still have to enter into the MOA. So the memorandum of agreement still remains. But in this scenario now, the UIF office will actually be paying your staff directly into their bank accounts. So the percentage that they calculate per employee based on the application that we submit, that'll give them a rand value that they will be qualifying for, and that amount will then be settled directly into the staff member's bank account. So there's a few important timeframes to just take note of in this scenario, so that we've got proper visibility of the way that we need to distribute the cash and also manage that. We discussed the memorandum of agreement in the previous slide. So when you first submit your supporting documents, there is a 10 business day window within which the UIF needs to acknowledge your application, and also then, once it's approved, pay the money into your bank account. So whether that's actually feasible or not, the research that I personally did, and Jan, thank you for sharing all the stuff that you are reading online as well. There is a lot of speculation at this stage around how efficient the UIF office is, and whether the TERS program will actually work the way that it's been designed right now. There's a few labor unions that have already applied for SARS to actually take this function over from the UIF office, because they obviously are much more able to handle the volume of claims that are currently coming in. So the way that the law has been written, these timeframes are applicable, but again, there's a big possibility that SARS will actually take this over from the UIF office due to a massive backlog at the moment. they are talking about only 27 employers that have actually received their applications yet, up to now. So there's a few comments. Let's quickly just see. Excellent. So Melissa's just made mention here, which is great. There's a 10 working day turnaround on the UIF application. Obviously, that stands parallel to this TERS, and that's given the fact that all your forms have been filled in correctly first time around. Natasha, it's unfortunate that's the country. If the UIF can't cope with the unemployment applications right now, and you guys would have seen in the media, there's thousands of people sitting on the side of the road waiting for their applications to be processed, which freaks my mind completely, is the fact that the UIF office is supposed to administrate this in a time where everybody is dependent on their efficiencies. And now it's come to light that all their staff and their call centers are actually under lockdown themselves. So there's nobody in the office dealing with all of these claims. So my question, and I think this is what the trade unions also are asking, is if there's no staff, how are you going to submit and process all our claims? That's just completely absurd. But nevertheless, I think that's a conversation for another day with a lot of strong drinks, and then we can have nice discussions. But as far as today's session goes, is our advice is get your applications in via the system as quickly as possible, because there's a few days turnaround time. The quicker we get these things processed, the quicker the clock starts turning, and hopefully by the time that we've got full closure on who's going to be administrating the actual payments, yours is already in the system and it's already been approved. It's also important to note on this specific slide, there's a lot of research that they've already published in media. So one of the biggest backlogs at this stage the UIF office is dealing with is either incomplete or inaccurate applications. So you guys will see that the next slide will give you a nice broad overview of exactly what we need to submit to their office as part of the application. So please make sure that we get that right the first time. And our office is obviously on standby should you guys need any advice or any assistance on that. We've also done a do-it-yourself. So you guys will receive that via email later today with this recording and the slide deck. So it's a nice how-to. It speaks to the actual fields on the Excel document that you would need to be completing. So we are trying to eliminate any possibility of that initial application that you guys will be submitting of being incorrect or incomplete, just enhancing your chances to get your monies disbursed as quickly as possible. So we've already touched base on the fact that once the TERS money hits your bank account, you have to disburse that cash to your staff members within 2 days. And in the case where the employer has already part paid the employees, there has to be a recon done by the employer to then reflect the fact that I have not disbursed more money than I received, or the staff members have been eligible for, and that also needs to happen within 2 days. So your submission of proof has to happen within 5 days of the payment to the UIF office. And in the case where your business operations are recommencing, that has to happen within 10 days. So we just touched based on the submission and the application. So all employers, regardless of whether you've got more than 10 employees or less than 10 employees, we all need to submit exactly the same documentation. It's just the way that the payments to the staff, that's the only difference between the two. So there is an email address on the UIF office's website. And the initial first step stipulates there that you need to send an email to that email address. And then there's an automatic reply that comes back with all the templates and all the supporting documents attached in that email from them. I've done this a few times myself. So I don't know whether any of you have had success with that, but none of my emails have actually had any response. So we actually had to go onto the UIF office website itself and downloaded all the template forms ourselves, and then we started completing it that way. So there is an Excel template that you will be required to complete. You will also need to submit, and this is an important one, you can't just submit the PDFs. You have to run this out of your payroll system in CSV format. So there is a 3 months payroll, obviously disclosing all the staff members on the payroll, what their normal grosses were, etc. And that needs to be exported in CSV format. You have to submit a bank confirmation letter from your employer bank account. And this again is regardless of whether you've got more or 10 staff members. There's a letter of undertaking. This is something on the website itself, which is ultimately the contract that you enter into. It sits outside of the memorandum of agreement. So it's built into the system now, and you have to actually work through the data and then actually sign it. And then there is an acceptance. So this is quite a weird one. So I'm applying to the UIF office. They then come back with an acknowledgement, and I then in turn have to acknowledge their acknowledgement, if that makes sense. So it's the weirdest step, but it's a prerequisite. You have to actually go through that process. And then you have to also submit your actual payroll reconciliation. In other words, these are my staff members. These are their normal gross salaries. I'm deducting UIF, I'm deducting PAYE, and there's their net salaries. So they are reconciling that, number one, against the database of the UIF office. So when you submit your payroll each month on the UI19 form, we're disclosing exactly the same information on your behalf. So what they'll now be doing is checking the data that we are applying for on the Excel spreadsheet against the actual data that we've been submitting to them. So please steer clear of any sort of attempts now to, put in much larger salaries than you would have otherwise been paying, because it's going to throw out your application, because there's going to be a disconnect between what you're applying for and what you've been submitting as an employer up to now. You'll just see there, I've made mention in the two comment sections there, the employer bank confirmation is prerequisite, regardless of whether I'm applying for relief for more than 10 employees or less. And I've also just mentioned there that this is now, the letter of undertaking is now on their website as a separate document to be completed. So once we actually get to the point where our applications are successful and the UIF office has acknowledged that our funds are on its way, how will the money be paid? So from the very first piece of legislation, it came out that there's actually a closure date, which would have been our previous lockdown date. And when the president announced the further extension of lockdown, the legislation was adapted. And at this point in time, we are working on a closure date of 30 April, which is in a few days. However, if you look at the memorandum of agreement, there is a stipulation there that says, and I actually think I might be jumping the gun because I'm just quickly checking, it's a slide. Oh, you know what, I'm actually referring to, it's the do-it-yourself manual that you guys will be receiving. I've just discussed there the fact that there's a few clauses inside the memorandum of agreement, and everything there talks about the 90-day period. And they also make mention there of a specific clause where it says that 30 days from the closure of lockdown, or until such a time where it's been recalled by the president. And again, it leads us to believe that the lockdown date of 30 April is something that may be very well be outdated at this stage. And again, it's our advice to get your applications in as quickly as possible so that we are getting into that turnaround time. So this first period of temporary closure for 30 days from the date of lockdown, that's the 30th of April that I'm referring to. Then there is a second tranche, and please keep in mind that you have to apply for TERS relief for each and every lockdown period. So it doesn't automatically extend into the next. So if the president announces on Thursday that there is a phased approach to lockdown being lifted, but our specific industry may very well still be under lockdown, there's automatically a new application that has to go in for this new lockdown extension period. Because the ones that we are entering into now is only valid for this initial lockdown with its extension included. So for those of you that have already submitted TERS, and I think there is a few that I personally know of, we submitted your TERS applications for the very first lockdown, but then the extension came, and we just need to make sure that we are submitting a second application for that extension period as well. And then there's a third one, which is again a 90-day period within the memorandum of agreement period. So again, that 90 days, it's our understanding, will only start by the time that we've physically signed the memorandum of agreement on the UIF office, and it's then being approved from that perspective. So our obligations as employers, what must we do to make sure that we remain compliant? So we obviously in South Africa need to keep proper physical records of all our accounting and bookkeeping data for up to 10 years. In this instance, they want us to keep all the TERS documentation separate from our normal accounting records, and this needs to be available for a period of 5 years, keeping in mind that for those of you that have dealt with ridiculous SARS audits now going as far back as 10 years asking for physical proof of payment, that's unfortunately the law. So the reason why we need to keep these records for 5 years is at any stage the UIF office could appoint an investigator or an auditor to then go into your actual accounting records and physically inspect that everything matches up. So we also need to keep a proper audit trail. So make sure that if you are running your own payroll and we are not responsible for that, please make sure that you use the proper UIF codes. There's specific UIF codes that you have to use when you apply for relief or when you have temporarily let staff go under this lockdown period. It's not the normal I'm resigning or you've been fired or you've been retrenched. Those codes don't apply during the COVID-19 period. So we must please make sure that our payroll systems are nicely updated accordingly. We've just also said there that you can't draw any checks or withdraw any funds against this disbursement. It has to be only paid towards salaries. I've mentioned to you guys that we've done a do-it-yourself checklist. So something that's going out later today. It's a nice quick 2-pager. It'll highlight the checklist of all the supporting documentation that you would need as an employer. You are very welcome to make contact with Marche at my office or myself or Melissa, maybe even Janine. We've got all the template documentation that needs to go in via this application. So the second part of that checklist will then be discussing on the Excel spreadsheet. There's a vast amount of columns that you need to fill the actual data in per staff member. And it's a nice walkthrough step-by-step that will show you what you need to complete. And then, like I said, double check that information, please. Make sure that it's sorted the first time around so that there's no possibility for the UIF office to then send that back. Obviously, the disclaimer would read in layman's terms that this is what we know to be true right now. There's no possibility that this will not change by this afternoon or tomorrow. We are going to keep you updated as quickly as humanly possible. And please use us as a guide. This is definitely not legal advice. So even the documentation, I've had a few clients now that have come back to me saying that they've downloaded the initial documents, they've submitted it, and now the UIF office came back with a rejection letter saying that they've used the incorrect documents. So please make sure that you are using the most up-to-date documents available on the UIF portal. And then let's hold thumbs that this actually bears some fruit for the guys desperately in need for this relief. Guys, so obviously now it's open to the floor for some Q&A. So anybody with any questions or any comments that haven't come through the chat yet?
Luan, can you hear me?
I can. Hi, Marguerite. How are you?
I'm good. How are you?
Excellent.
Thank you. That was a very informative session, and I just wanted to know, and I'm sorry if this is something that I missed at the beginning because I did join late, and I also missed the previous session. Can you maybe just reiterate what would be deemed as proof of being affected by the COVID-19 pandemic? So what would they accept as proof of being affected?
Marguerite, so I discussed that right at the beginning. So just to quickly,
my apologies.
No stress, no worries. So they're talking about a distressed employer and a distressed employee. Now, the initial definition was quite strict. You had to be under physical lockdown. So if you were to part trade at 50% capacity, for argument's sake, you would have been disqualified. But they've now broadened that definition. And it now includes all employers and staff that will, in normal circumstances, not be receiving their full 100% salaries. So you would have seen now as one of the, on one of the last previous slides, we mentioned there that you need to submit your actual last 3 months worth of payroll. So the latest payroll, I guess, in my view, would need to prove and show and reflect, for that matter, a lesser amount that is payable to the employee because I physically can't pay them. So I guess in the case where we've already had a discussion with our staff a few weeks ago and we told them, listen, this is where we're at. We won't be able to pay your salaries for the month of April. You need to be, well, we're all at home anyways, but you have to apply for relief from the UIF fund. My payroll, obviously, this month would disclose that I'm not paying any staff because there's no money coming in. And that would be proof enough because I've been an infected employer. My operations have ceased. Yeah. There's no money coming into the bank. If in the case where I choose to pay a part of my staff members' salaries, let's say 50%, again, accordingly, my payroll would disclose that and it would form part of my, my submission. So there were talks in the initial phases of this being implemented that we would have to prove via financial statements and bank statements and stuff like that. That has all fallen away. So it's literally now a question of, because again, this is only employer relief. This is not business relief. So if I can prove that I'm unable to pay full salaries, regardless of the percentage, I am immediately an employer in distress.
Okay, thanks, Luan. I think that's very clear. Thank you.
Brilliant.
Hi, Luan.
Hi, Jan.
Yes, man, skus. Net om aan te sluit by die vorige persoon se vraag. My industrie, ek het 'n delayed inkomste, want as jy in die versekeringsindustrie is, weet jy nie presies. Ek is nou besig om te sien, blyk my vorige maand, maar kyk, my maart syfers gaan dalk nog nie so sleg lyk nie, soos wat dit moontlik nog gaan lyk, weet soos kom ons sê Mei nie. Weet so jy het nou genoem dat jy kan bewys dat jy nie in staat was om jou werknemers hulle volle salarisse te betaal nie. Wat van 'n maatskappy in my industrie wat delay, weet dis is half 'n knee-jerk reaction, weet wat gebeur in die industrie, maar dit is delayed. So ek behoort dalk nie nou te kan bewys nie, maar of 2 of 3 maande vanaf gaan ek dit eers kan bewys, want dan gaan ek eers die ware effek van wat gebeur het hierso in my besigheid sien. Yes, enigiets daaroor?
Jan, so just quickly for all the English-speaking clients and some of the overseas guys, I'm just going to quickly translate that into English. So what Jan is asking is, he operates in the insurance industry, and because they earn commissions, there is a knee-jerk and also a delayed reaction to, a policyholder can always retrospectively cancel a premium, or if I cancel a policy today, it may only have a bearing on my commissions for next month. So his question pertains to the fact that at this point in time, he might not be an actual distressed employer, but next month the picture might look vastly different. Jan, so I think my layman's terms interpretation of that would be, because we've got these time frames, I would actually still submit an application, whether there's proof enough or not. I would still get my application in, because by the time that the UIF office needs to evaluate my application, it may very well be at that stage, a week from now, 2 weeks from now, a month from now, that your commissions have turned to the worst and you are now an affected employer. The reality is also that, I'm talking to a lot of clients at the moment, specifically around cash flow management. So the question is, if I've got 10 Rand in the bank, as an example, and I need to pay staff and I need to pay operational expenses, because remember, the fact that we're under lockdown hasn't mitigated the risk that most of us are still stuck with some serious fixed cost, paying for office space, paying for infrastructure and subscriptions, etc. So the reality is, that 10 Rand all of a sudden becomes quite an important 10 Rand in that example. So the question is now, who do I end up paying? So it may still be very worth your while, if I can add to the conversation we had right at the beginning of the session, it may very well be a wise choice to pay your fixed cost and keep compliant with all those contracts that you've got in place, and pay your payroll last, because depending on your cash flow, you might have to then decide, look, I'm disclosing an amount of 50% of my normal salary. There's no legal grounds here, and there's nothing prohibiting you from still drawing against a shareholder's loan account or a director's loan account, any amount that you don't disclose under your normal payroll. So what I mean by that is, if I earn a normal 10,000 Rand per month as a gross, and business may very well slow down. It hasn't yet, but I am a responsible business owner, and I'm thinking short to medium term, about, let's say, the next 3 months. I'm not going to take my full salary as normal, because I need to keep some cash flow in the bank. I'm only going to pay myself 50%. Jan, automatically that makes you the stressed employer, because that's what you're disclosing on the payroll. Does that answer your question?
Yes, Luan, that sort of answers my question. I'll just, I've got a couple of questions, but I'm going to sound extremely stupid.
No, please, Jan. So, this is exactly why we're doing this.
Formulate the question.
Happy days. So let's pass the mic on to the next person, and we're going to come back to Jan's next question just now.
Cool. Thanks.
Luan?
Hi, Natasha. How are you?
I'm well, thank you. And yourself?
Good. Thank you.
Similar to the previous gentleman, Jan, things are okay for now. In the next month, we really do not know what's going to happen thereafter, because some of our engineers, they're cancelling their contracts. And so what we want to do, I don't even know how to even formulate the question. What do we do?
I think we're all in the same boat here. It's literally, if somebody has a magic wand to just make all of this go away, we could all have a glass of wine and a beer right now, and that'll make this a much easier conversation. But that's not where we're at right now, is it?
No. Okay. Do you think would it be okay for us to apply for TERS or UIF for HOA, for example?
Absolutely, 100%. So if I can bring this conversation, Natasha, in with a conversation I had with Kathy and Fiona last week. So guys, it's really important, and this is a very important question as well. Most of our workforce is divided up into two different components. We've got our admin staff and support staff that earn a salary. They are not income producing. They are there to answer the phones and to send out invoices, etc., etc. But then we've got our actual production staff, the guys in the field, logging hours and adding to actual billables. Now, I want my workforce obviously to remain as productive as possible, but my admin staff, because of the fact that they're under lockdown, there's an absolute assumption that they can't produce at normal capacity. Unfortunately, some clients are still stuck with operational processes that aren't cloud-based. So it means that they're not at the office. So that part of their jobs are physically not being done. So automatically, I can't pay this person their normal salaries, so they are a distressed employee. And nothing suggests that a specific segment of my workforce could actually be eligible as distressed staff or distressed
some are
employees,
not.
while some are not, exactly, because they're still producing income. If I then, let's say as an example, I don't pay anything for my admin and support staff, but I contribute 50% to my workforce that are still producing. Everybody would be deemed to be distressed employees. It's just the percentages that now differ. So we would have to then just disclose that on the TERS application.
All right. Okay. Now my only concern is, right now, you know our business model. So, we receive a lot of funds from overseas. Won't the UI say, "Oh my God, you've got so much. Why are you asking for relief?" Meanwhile, those are actual engineer salaries. You know what I mean? How do we prove it?
Look, your business model is proof enough, Natasha. So without going into too much detail, your business model is ultimately you're a cost center for a bigger organization. So, I mean, at the end of the day, your income is pretty much the recoupment of the engineers in the field to pay their salaries. So there was never any objective in your business model to be a tax paying organization. In other words, to make a profit from your operational expenses. This cost center of yours is there to administrate the funds from overseas clients to ensure that I pay my local engineers that are actually physically on the floor with our clients. So,
all right. And can we also apply for TERS for them, even though they are foreigners? I mean, they've got the critical skills work permit and they pay UIF, or would it not be permitted?
100%. So again, there's no disclosure under that piece of legislation that prohibits anybody from claiming. If you are a contributing, and I mean, it's worthwhile to maybe just quickly jump to the very first slide we just had. You would have seen there that just close my chat box. Contributors are automatically eligible, and that goes for employers and employees. In other words, anybody that is paying towards UIF will be permitted to claim.
Okay. All right. Fantastic.
Happiness.
Very much so.
Luan Stein, yeah?
Hi, Stein.
Can I ask a question?
You are very welcome, yes.
How does an employee not get a double incentive? Because if TERS is for the employer and UIF for the employee, and I'm, as an example, deducting 5,000 Rand off a payroll to my employee, and I'm claiming that via TERS, when I get that payment to me, whatever the percentage of it is, and I distribute that back to the employee, aren't they getting a double benefit if they also claim from UIF?
They, in your case, in that example, definitely they are getting a double benefit. But you will see on the slide that I've just jumped to now, the very last bullet point reminds us of the fact that regardless of what relief I'm applying for, I can't actually end up a scenario.
Okay, there we go. So that answers that question. Okay, so I would then just have to pay back the surplus if
there is any surplus, correct?
Okay.
So I think I used the Kathy Fiona example on the next slide.
Yeah.
Let me just quickly jump over here. Where did I use it? So I used, it was actually on this one, sorry. I used the example there where in the case where I'm applying for TERS based on these percentages, and I am applying to the UIF office, it's only to make up the delta. It's never to actually apply for 100% benefit on both scenarios, if that makes sense.
Okay.
So in other words, just to maybe elaborate, so the example we used is if I have an employee that earns 10,000 a month and I can't pay them anything in this month. There we go. This is where I was very close. So I can't pay them anything of the 10,000. TERS would then pretty much pay back a rough 4.5 as a possible if the 45% is correct. So then there's a deficit of 5.5. I can then go to the UIF office, the unemployment insurance fund, and apply for relief for the 5.5, but the two combined can never be in excess of the 10,000 Rand.
Okay. And just, I don't want to rehash stuff you've already said, but just to be dead sure, in terms of the First Lady's question, what proof do we need to give them? It's not about really proving that you have no income. It's just proving that you have to manage your cash flow and somebody's in distress. So you may have enough cash in the bank to pay your salaries, but you need to manage your cash flow.
Because they're suppliers, 100%.
And therefore you are being wise. So they're not going to scrutinize and you don't have to submit any other proof other than just your pay slips that are reduced.
There's no financial information being disclosed. So there's no management accounts, there's no bank statements, nothing like that. Because at the end of the day, like you said, if there is cash in the bank right now, it doesn't mean it's disposable. Remember, SARS is also one of your suppliers. So he's going to want his pay as you earn on the 7th of next month, and he's going to want his VAT end of next month in your case. So to have proper visibility and management of that cash flow exposure is quite critical in this case.
Thanks, Leon.
Pleasure, Stein.
Leon, it's Fiona here.
Hi, Fiona. How are you?
Hi, I'm good, and you?
Good, thank you.
So in our instance, where we have the variables of income, where we've committed, for example, to pay some of the lower income salaries in full to the employee. How does that work in terms of then when we're applying to the UIF? How does that work in terms of their salaries will actually be on our payroll, would be 100%?
Yeah, so that needs to be very carefully managed, Fiona. I'm just quickly jumping to the slide where I made a note for myself because I knew this question was going to come up. Just give me 2 seconds. So it ties in with the conversation we had during our meeting last week. So the only way that I see that legally play out, Fiona, given the fact that they are very explicit about the fact that in the case where I can pay them 100% of their normal salaries, I'm actually not in distress within that framework of the law. So I've thought about it after the session last week with you and Kathy, and the only way that I see us circumventing that is if we allocate this 100% payment that you're about to make, if we allocate that as an upfront prepayment to the staff, so we can always deem that to be a staff loan right now, because at the end of the day, you guys are paying them from your savings, not from operational cash flow right now. So that's an important factor to put on the table. I'm not producing any income, so I am severely distressed. The fact that I'm choosing to pay my staff 100% of their salaries out of my pocket is just my good governance as an employer. And nobody can fault you for that. However, I'm thinking the way that we need to disclose that to the UIF office, we may need very well to disclose that as a temporary staff loan or an upfront payment on their salaries, so that it doesn't actually hit the payroll. It's important to please pass that along to your payroll company, if that's the route that you guys think of following. It must please not hit their salary slips right now, because that'll automatically disqualify you as a distressed employer. So much rather speak to Melissa, have those payments allocated to a short-term staff loan account on zero, and then by the time that TERS refunds the money, obviously you are then refunding yourself, because you've just played the bank for a couple of weeks. Does that answer your question?
It does. So then I'm the payroll company.
Welcome on board, payroll company.
So basically, then those people would not be paid. You would not receive a salary.
They may very well be paid. And like I said, just please liaise with Melissa where those payments needs to be disclosed in zero. But as far as the payroll goes, you'll be providing them with a zero income payslip for this month.
Okay. All right.
Unless, Fiona, unless
Yes.
the other practicality is you could always, because remember, they say the distressed employee does not earn his or her full 100% normal salary. So you could very well, just to keep it above board, could very well issue pay slips for 50% of their salaries.
Okay. Okay.
If that makes sense.
That's better. Yeah. That would be better. So I thought of something else now, I've forgotten. Okay. Yes, and then sorry for the just to check with you for the staff, you know, that the working staff, so to speak, where we you know, made our agreement on the reduction in their working hours. Are you suggesting then that we rather stick to the percentage as per the UIF?
I would use that as a benchmark, definitely, because those are the only givens that we've got right now. Everything in between is all wishy-washy and what ifs. We can't say what the actual percentage would be. So my advice would definitely be, let's start with the framework that they've given us. In other words, the 38%. Let's start with that calculation and see what potential disbursement we can get and expect from TERS. Obviously, the delta is something that we would still be liable to pay the staff. So if there's let's use a 10,000 again with a rough 35%. So that means there's a possibility of 3.5 being disbursed by TERS, which means me as the employer, I've got the responsibility for the balance, the 6.5. So if you are going to be making any part payments now on their salaries, I would use that calculation as the basis and probably put the 6.5 on that specific individual's payslip for this month, in the hope that the 35% is in fact the final amount that TERS approves. If it's the case, your books will balance to zero. If, for argument's sake, they use a 40% threshold, there will automatically be an additional 500 Rand that they're going to be paying into your bank account, which you would then have to just reimburse to the UIF office.
Except that in our situation, they would pay the employees direct.
Correct. And again, like Melissa said last week, it's really important to just have this conversation with your staff. And I think we all should have that open conversations with our staff. That in the case where the UIF office pays them directly, remember, you as the employer will have full visibility of the amounts that they receive. So they won't be able to hide the money from you. If there's any surplus,
will have visibility, you say?
Absolutely, because it's part of the reconciliation that we have to submit. Okay. So whether I receive the money or the employee receives the money, as an employer, I still have to do a monthly reconciliation of what did I pay my staff, what did I get from TERS, and where's the surplus gone. So have that conversation with your staff and tell them, listen, this is what's going to happen. The amount that you receive from TERS plus the amount that I give you may not be in excess of your normal gross salary. If there is any additional funds that you've received, you would have to pay that back to me as the employer, which in turn would have to reimburse the UIF office.
Okay.
Perfect.
Right, thank you.
Pleasure.
Luan?
Hi.
Is Alet toegaande?
Hi, Alet, goed en jy?
Sorry, I'll switch over to English.
No worries.
If I ask you a stupid question, just excuse. I just want to ask you two questions. So, say for instance, I'm obviously the business owner, but I've now decided to also pay myself 50% of my salary.
Yes.
Then I need to do the whole process for TERS, and I also need to do the whole process for UIF.
So obviously you're going to be paying yourself your 50%. So I think the UIF and TERS combination for me, in my view, would only apply in the case where you can't pay yourself anything or a staff member anything. So the specific slide that we've got on the screen right now highlights those specific parameters. So in the case where I can't pay myself anything and I earn towards the higher threshold, there's going to be a massive difference between what I normally take home as gross pay and what the TERS program will be paying back as a benefit. So that delta then, in that case, would then be something I would consider to apply for relief under the Unemployment Insurance Fund. In your example, you would actually then fall into the second column here. In other words, where I am still allowed and able to pay myself 50% of my normal gross. So in that case, you would only apply for TERS to then get the 50% relief. And you would pay yourself your 50% from normal operational cash flow, if that makes sense.
Yes, okay. So it's only the TERS that I need to apply for. And then the other thing I wanted to myself full salary for April. And now going forward, just to get the application in, because I'm sitting in the same situation as Jan, whereas I still made a few placements, so cash is coming into the business, but I don't have any clients left because there's a recruitment freeze obviously on all positions, and I don't see that changing soon. So going forward then, because you said there's two sections, if say for instance they extend the lockdown now, so then I only apply for TERS from going forward from May, because I haven't, if I pay myself a full salary in April, I just want to know, now I start applying for TERS going forward in May, which is only 50%, are they not going to look at my April 100%. Payroll and then go like, oh no, let's disqualify this client?
Absolutely.
So if I rather,
Absolutely. So keep in mind that part of your submission is 3 months payroll that you've exported from your payroll system. So it's really important there. My consideration would be to rather pay yourself a percentage even for April. And if you're paying yourself, let's say again, the full 10,000 Rand, I would literally disclose, let's say 60% on my payroll, and the 40% I would much rather allocate against a short-term director's loan.
Yeah, a loan account.
Yes, absolutely.
Okay, so then I'll just go back to Melissa and tell her that the payroll that she did for April, she needs to change now.
That would be my consideration for sure.
Okay. All right. Thank you.
Excellent. Pleasure.
Hi, Luan.
Hello.
Sorry, I'm jumping on this loop on this loophole called the loan account. I actually like this idea.
May I just categorically say that I never put that on the table.
Okay, so let's all agree to that one now. I think the what's nice about this specific idea is that you don't really actually leave your employees, let's say, in a worse off position if you actually have the cash in the bank to pay the full salary, but rather go that route and later get the money back from from TERS and refunding yourself in essence. But the question that I wanted to ask you is, let's say, for argument's sake, your total loan account for your staff is, let's call it in 30-day, over 30-day period or 90-day period. Let's say it's 50,000 Rand for you and all your staff, and you only were refunded 40,000 Rand from TERS. So there's a 10,000 Rand left that is owed. Can you write that off as bad debt or something like that? Sorry, it's just a stupid question.
No, it's not, Jan. I think there's two elements to that question, which is quite important to me. So obviously one needs to put on the table the fact that, I said this to Kathy and Fiona last week as well. You have to commend the guys that are doing everything they can to make the books balance and to ensure that their staff is still paid. And that's why the loan account transaction for me, and I would definitely not call it a loophole, please. That could land all of us in hot water. But I think that definitely to be a practical method of still balancing the funds. Because at the end of the day, whether I now need to go to the bank and apply for a short-term loan to keep paying my staff, and then I have to pay the bank back with interest, or whether I've got the cash reserves for the time being in my own bank account, and I just choose to be conservative because I am not sure of what's going to happen in the next month or 2 or 3, nobody can fault you with that approach, because it all still relates to me paying my staff. So whether I then apply for TERS to get the money back to replenish the funds I took out of my operational cash, in other words, settle that loan account, it's still the disbursement for salaries. That's the way I've approached that thought process. So obviously I'm always open for discussions around that. I don't know everything, and somebody else might have another view, or might pull the Bible out that says we're not allowed to do it. I'm not sure, but the reality is that's where we are right now, and I think it's just really important to make sure that we've got full visibility of all these elements. So between your payroll that hits the income statement and your temporary loan account that sits on the balance sheet, it's really important to make sure that whatever's sitting on the balance sheet eventually also needs to move over to the income statement as an expense. So when you spoke about the 10,000 Rand shortfall that's now left after TERS refunded you the cash, that's a real probability, depending on where on the specific slide that we're looking at right now, those staff of yours, where they actually earn towards the higher threshold or the lower. The higher they earn, the bigger the possibility that there's going to be a deficit. Exactly. So if we can put that in inverted commas as a bad debt, it, in essence, from an accounting perspective, would actually just be normal salaries. It will actually move back to your payroll account, because ultimately the loan account originated because I paid my staff. So the adjustment has to be made against the payroll account again to zero that loan account. Does that make sense?
All right, yeah. Look, I'm just trying to see that there's, the easiest possible way. Because I mean, if you're gonna tell somebody now, listen, let's say you do have the funds, but you're gonna tell somebody now, listen, I'm taking away 30% or 20% from your salary. Most of the people that I know of, actually they live equal to with the salary that they earn. So now all of a sudden you're going to tell them, listen, I'm taking away 25% or whatever of your salary, and now they won't be able to pay the rent or whatever the case might be. So I'm just trying to mitigate those shortfalls, because if you say TERS is going to refund you, I might as well just say there's a loan account, and if TERS doesn't give me all the money that I, let's call it, loaned everybody, the staff, yes. Is there going to be a legal way for me to offset that loan or that into a zero, so that there is no issue for any of the employees or the business at the end of the day?
Yeah, so let's take a step back there, Jan. I mean, at the end of the day, the implications on your staff should be fairly minimal. I'm reverting back to the 10,000 Rand example. So let's say at the end of April, you make a call and you say to your staff, I am going to cap all salaries for this month at 60%. In other words, the payroll gets produced, everybody gets their pay slips, and you only pay 60% of their normal salaries. But you have a similar discussion, like I said, just had with Fiona and Kathy, is you then have the discussion with them to say, look guys, but obviously I do also understand we're all living based on our earning potential, hand to mouth. So I can't leave you with the hope of TERS refunding us in time by month end. And there's a possibility that some of your debit orders can't go off, or you can't pay your rent or your car installment, etc. So Melissa made a very important point last week when we had this discussion with the team. Us as employers must also just make sure that we allow our staff the opportunity to also take responsibility for their own finances, because it's very easy to pass this buck onto us as the employers, to say, well, this is where I find myself right now, and I'm looking to you to solve the problem for me. So we all know that there's a lot of financial institutions that have already announced a lot of relief programs and a lot of measures where, there's payment holidays, etc. Your staff need to make 100% sure that they investigate all of those opportunities and apply for every single one of them. Because at the end of the day, TERS might refund you in time, but they also might not. And, the bigger your payroll becomes, the bigger the risk that you end up being the guinea pig and also the bank. So please make sure that the staff take their full responsibility first and foremost. And then secondly, if you then have that discussion to say, look, I am going to pay you the 40% deficit over and above what I've paid you on the pay slip, that 40% would then typically go into that temporary loan account as a staff loan or a staff advance on his normal salary. And I mean, those are all normal payroll parameters that we run, for clients. This is not COVID-19 exclusive. This is something that happens more often than not. So there's no eyebrows being raised about a process such as that. But I think just chat to your staff, Jan, and make sure they understand the parameters and also the implications of when they will be receiving what. And like I said, there's also the possibility you've got less than 10 staff, so the UIF will actually be paying your staff directly, which means that if I give them the 40% deficit on a staff advance or a staff loan for that matter, and it ends up that TERS has refunded them in excess of their normal gross, they obviously have to refund that cash to you as the employer, in turn refund it to the UIF office.
All right. Sorry, then sorry guys, just one last question. With regards to, sorry, just to come back to what you said about what Melissa said, and everybody needs to take a responsibility for their own finances. I know specifically WesBank, when you've got a vehicle financed with them, you actually have to prove to them that you're actually suffering financially. So the only way for you to take responsibility with regards to your WesBank, let's call it vehicle, the other bank seems to be very lenient towards that, but it's would actually to show the bank, listen, there's actually a bit of an issue here with my salary. So you're going to have to show them a specific salary pay slip that says, listen, I'm now actually earning less.
Spot on, Jan. And I mean, there's the credibility to the discussion we just had, so disclosing a lesser percentage and applying the balance as a potential advance just now, just to make sure that there's sufficient cash flow for them in the bank to make sure all their personal finances is taken care of. That's a bona fide conversation right there. So definitely.
Okay, cool. Thanks so much, Luan. Thanks, guys.
Happy days.
Luan, Rita, how are you?
Hi, Rita, goed en jy?
Fine. Sorry, I had technical problems again, so I joined a bit late. So if you did address this in the beginning, I do apologize. If you are deemed to be an essential service, will you still be eligible to apply for TERS?
That's the only thing, Rita, funny enough, and I'm very grateful that you put that on the table, because you wouldn't have seen that anywhere in our slide deck, and you wouldn't have heard us speak about that during this whole presentation, because nobody knows. There is no segment in the UIF that we could read up on. There's nobody that's announced an actual, what's the word I'm looking for now? There's nobody that's actually promulgated anything and reference to a specific section of the Act. I think it also ties in with the conversation, and I don't know when you actually joined the session, Rita. We just discussed a bit earlier about the fact that, we are waiting further details on this phased approach of lifting lockdown on Thursday evening. So I think maybe that's also why there isn't anything concrete available yet, because we don't know yet. But I think, our normal channels, the Facebook page and our newsletters, etc., the minute that we've got actual knowledge around that, I'll make sure that I send out a newsletter to that effect. You'll be the first. You'll be the first to know.
Thanks. Oh, sorry, it's me again. I've just sent the chat saying that if you have already paid April 100% on your payroll, can you still apply for TERS backdated for April?
No, this is what Alet also just asked in reference to Rita. So because you have to submit 3 months worth of payroll to SARS as an export from your actual payroll system, if I'm able to actually pay 100%, you know, there's a big question mark whether I'm actually a distressed employer or not. So my gut feel would have said that, you know, I'm following a few accounting firms and also a few groups in the United Kingdom. And unfortunately, what I'm about to say is going to open up a can of worms on my side and for everybody dealing with your payrolls on your sides. But what has happened there is exactly this. So they all ran their payrolls end of March. Remember, they a little bit ahead of the curve. So they ran their March payrolls. And then when HMRC on their side announced all their relief programs, all their March payrolls were literally reran in those last 2 days before submission. And I'm fearful. My advice right now is going to be exactly that. If you want to get your application in and be able to prove that you are qualifying as a distressed employer, you would have to rerun your April payroll.
Okay.
Not a great answer, but it's unfortunately the only one I've got for you at this stage.
Lou, it's Fiona here.
Hi, Fiona.
Hi. Just with regards to the 3 months, the payroll, are you talking about 3 previous months?
Your last 3 months, yes.
Okay. Okay. Thanks.
Pleasure.
Hi, Luan. It's Mornay.
Yes, Mornay.
I've just got a question around, I suppose, responsibilities for TERS application. Maybe you've spoken about this in the beginning. I didn't quite catch that. But, you know, obviously there's a lot of talk on social media, obviously also between different people. And I've heard of an example where one employee simply put all their employees on forced leave and explained that the employees are responsible to claim from the UIF, and it's in that sense the employee's responsibility, and they take no responsibility as the employer. You know what? At what point? You know, what is the legality surrounding that?
Yeah, Mornay, that's also a very good question, and you would have seen that there's an absolute can of worms right now of flooding media, specifically around employers that are, you know, pulling tactics and stunts like that. There's a few horror stories, you know. So at the end of the day, I mean, and one is actually quite close to home. You know, we know of an accounting firm that literally in the beginning of March sent all their staff on unpaid leave and just said, you know, we are not cloud-based like we are. So we can't access clients' data, we can't access clients' files. So you are going home on unpaid leave. And I mean, there's been enough legal precedent now over the last month or two being announced and also written on the topic that you are not allowed to utilize annual leave as part of lockdown. So, you know, any employer that are pulling stunts like that are actually in direct transgression of that legislation. So you have to go through the proper UIF channels. You have to go through the proper TERS. You can't just simply say to your staff, listen, we're closing down. You are using annual leave or you are using unpaid leave. It doesn't work that way. So that's why these programs have come into existence in the first place, is to make sure that, you know, we retain our staff. Look, at the end of the day, this has to pass at some stage as well. And whether we know what that new world is going to look like yet or not, the one thing that we definitely know is life has to carry on. So from a government perspective, and even from us as an employer, it's absolutely critical that we put the necessary measures in place to try and retain as many jobs and as many staff as possible. You know, so any decisions we make, in other words, has to speak to that specifically. We can't just throw our hands up in the air and say, there you go, annual leave, unpaid leave, come back if you want to or not. You know, I think that's quite a a risky approach to take to all of this. I'm not sure whether that's something that I would have ever thought to do. But again, that's just me. So I don't know.
There's a couple of guys out there doing that. I mean, I've heard of a few horror stories. I mean, I remember in the president's initial address, he spoke about the responsibility of employees paying their employers, and paying suppliers and keeping the cash flow stream running, even while lockdown is on. But you know, there's even in our context, there's some people making some extreme suggestions, like putting people on forced leave, and having them work right over December without any public holidays to catch up with the leave that they've taken during the lockdown. You know, that, and other people just laying off staff, putting them on forced leave without pay, saying that when, you know, the curtain's lifted on lockdown and things are back to normal, they can come back. You know, and my argument is, who's actually going to come back after lockdown? You know, how will an employer rescue his business without any staff? Obviously, staff is the most important asset in a business, or one of the most important assets in a business.
Exactly.
How will they generate momentum again following lockdown? You know, even from a cash flow point of view.
Look, you know, Morné, I think you've hit the nail on the head. There's 100%. There's nothing that I can disagree with. You know, we also need to put into perspective that most of these people are making those rash decisions from it's actually just human nature. You know, it's a self-preservation choice that I make. And the reality is, you know, we make those choices when we are quite short-sighted and when we are thinking about the here and now. And that's completely understandable, because remember, I think different people process whatever's happening right now. And I don't think any of us actually, you know which sci-fi movie we are actually watching, you know, because it changes every single day. But the reality is, it's definitely not normal. So the way that I react to that reality is probably different from the guy next to me, from the guy next to him. And we all make choices based on that circumstance. But we definitely have to take a more short to medium term approach around this process. You know, we can't just think about tomorrow. And it may be easier said than done, but we're working really hard to keep a mindset of positivity and to keep a mindset of, in 2 months' time, this is what Calypso needs to look like. In 3 months from now, this is what we want to be able to help our clients with, you know. And someone said to me last night, you know, accountants actually have a crazy important job right now, because all the effort that we're putting in to help our clients get through this, in essence, at the end of the day, is only there to ensure that we also survive this. Because if all our clients go bust because we weren't there to support them and guide them and help them the best we can, then I also don't have a business in 2 months from now. You know, so it's thinking about the guy right next to you. I love the analogy that he used in that first presidential announcement. It's the domino effect, you know, and we spoke about it last week as well. And without going too much off topic, I do feel it's a valuable illustration to maybe just think about. So if we had 3 dominoes on the table right next to one another, and we were the one on the right, and one of our suppliers was in the middle, and one of their suppliers was to the far left. The reality is, we all have certain financial pressures right now leaning heavily on us and our businesses. So if I made the choice, because I am now leaning over to my left and I'm heading towards that middle domino because of my financial pressures, the chances of me actually falling on that domino will then obviously trigger a domino effect for the rest. So I need to find a way of mitigating the risk of cancelling any small business services right now, because at the end of the day, the conversation with that person in the middle should really be more about which pressures are you experiencing from the other side, from your customers and suppliers, that may be putting pressure on you, that may have a result on you leaning more towards me and cancelling my service. So the minute that we start taking a different approach to that conversation, you know, I've already had conversations with clients where we've realized, but hang on, their financial pressures are great, but there's actually mechanisms that we can now use through some of these relief programs that could actually put cash in their bank account literally in the next 30 days that won't necessitate them cancelling our retainer, as an example, or having to give up their office space. So with a slightly more extended approach, just past the immediate pressures we are experiencing right here and right now, it's actually amazing what you can come up with, Mornay.
Okay, well, thank you very much, Luan.
Big pleasure.
Luan, Rita again, just to get back to the leave
Yes, Rita.
issue. There's been conflicting information, as you said. I got a newsletter yesterday, which I can perhaps forward on to you, which is from NEASA, which says that you can place your employees on leave unless their contract stipulates something totally different.
Because remember, basic conditions of employment obviously still prevails. So there's nothing that we are applying for right now that could circumvent any piece of legislation contained in that.
So, then the other thing is, if the employee does not have leave available, then that obviously becomes unpaid leave.
Great. I would love it if you could share that article with us. So that's something that you received yesterday, Rita?
Yeah, it's from NEASA. I'm not sure what NEASA stands for, but there's some legal hotline. Gerard Papenfuss, if that rings a bell for anybody.
And it just goes to show how quickly there is updates available on all of this, huh?
So we received this from a HR consultant, so he's totally on top of everything. And the advice that we got is that as long as you consult with your employees, it's a consultation process, and you must be open about what you want to do and why you want to do it. And then obviously everybody, I can't say everybody must be in agreement, but it's a consultation process, and it makes it difficult during the lockdown time because you can't get everybody in a boardroom and discuss it. So you have to make use of various ways of sending letters and photos of the pages of the letters if you can't email it. So the advice we got is, as long as you follow the proper route and consultation and your staff is totally informed of your reasons and as to why and how, then you should be fine.
Rita, so I would love it if you could send that on to us, and with your permission, I would then gladly share that with the audience on our Facebook page. So for those of you that aren't on there yet, please just go look for the Calypso Accounting Community. It's a Facebook group that's specifically set up for clients only, that we typically share this sort of information between ourselves. So Rita, I'll be very happy to share that with our community. And then I think it's also important to just add to that. So remember that annual leave is the lesser of two evils, because at the end of the day, it's still paid leave. So an employer is not necessarily transgressing if they send their staff on paid leave. The issue becomes when it becomes unpaid without the discussion process. And I think that's what this newsletter speaks to, is I can't just automatically put you on unpaid leave because I am not earning an income in the next month or two. It has to first go towards paid leave. In other words, I still have the obligation to pay you your full salary against that benefit. And only thereafter, I would then move towards the unpaid leave. Am I right in understanding that?
Yes, that's right. I will, as I said, we get regular updates from this guy in this regard. So every time I get something, I will forward it on to you anyway.
You are actually, Rita, you are actually able to share that directly on the Facebook page, if you wouldn't mind doing so. So, as you receive these things, the ultimate aim for us was to enable collaboration on that platform. So it's definitely not one way.
My Facebook knowledge is very limited.
Send it on to me. I'll gladly publish it for you.
Okay.
Luan, Stein here.
Yes, Stein.
I just want to ask a question on following on Arlette's question, your answer to it, where she's the business owner and paying herself a salary.
Yes.
can she technically pay herself 0, live off a loan account and claim from TERS and UIF? Why can't she claim from UIF as well? Is it different if you're the business owner as well as the employee?
So remember, UIF, you're still a contributor, Stein. I think we are rather uncertain about directors because even though it's included in the legislation as an employee, there's no differentiation between the two. I'm not sure in that case, and I'm also not sure whether we would be, you know, maybe taking it that one step too far. I can't really say whether it's something that we can safely do and it would be okay, but I also can't tell you why not to do it, because again, I think we in uncharted waters here. So my gut feel says we should be able to do it, as long as, I think what Alet mentioned there is quite important to just bring into context, is I am still receiving cash, but that's on work that I've already done. So the placements that I've done over the last 2-3 months, I'm still receiving the cash for now. But I'm not going to do any new placements in the next 3 months, maybe even 4 months. So I have to take a conservative approach to the cash I've got available right now. And then, yes, why not live off a loan account just to make sure that I see myself through this period? Even more so when you don't have any other stuff to think of, you know. So this is just me knuckling down and taking a very conservative approach to cash flow.
Yeah, and then let's say you now do it that way, you're not 100%. You pay yourself a 0 salary, you live off a loan account, you benefiting from TERS and UIF, but then you do, and they pay you out, and then your business actually gets back on stream and you do make some placements. What then? That's
the hope. We all holding thumbs. I think then you can go on your knees and say thank you, because then your business survived. I actually think that's object achieved in that scenario. So again, there is no mention being made of a business that outperformed its short-term forecasts. In other words, I'm expecting to turn X, and as a result, I'm only going to pay my staff Y. And now I've actually exceeded those forecasts, and now I'm not a distressed employee anymore. Because again, that's all crystal ball stuff, you know. So that's, I think, also why the UIF office wants the past 3 months pay slips and not projected sales or pay slips for the future. So there's again also no mention of any recoupment because I made more sales than I was. Nothing under TERS relates to turnover or financial performance of the company. It only speaks to the ability to pay 100% of a staff member's normal salary, yes or no.
Okay. Thank you.
Okay, cool. I see there's nothing coming in through the chat at this stage. Everybody's questions answered. I'm quite conscious of time. I'm happy to continue the conversation as long as you guys are keen. But for those of you, we already passed the hour. So if there is anything that you need to ask and maybe need to get onto a next meeting, you're very welcome to do so. Thank you, Jan. If there's any updates that we receive on any of your questions, we'll post that on the newsletter as well as the Facebook page. Fiona's just asked for us to please send the checklist. Absolutely, Fiona. So you'll have your recording and the slide deck sent to you via email this afternoon, and the checklist will also be included in there. Pleasure, Janine and Alet. Nice catching up with you guys again. Thanks, Fiona. Okay, so it seems like most of us have all our questions answered. Am I right in my statement? looks that way. I see a few heads nodding, and I see a few thank yous in the chat box. So, okay, guys. I think from my side, to then conclude, what I'll do is I'll send out the email this afternoon, and any updates that we receive, we'll make sure that we send it through to you guys through our normal channels. If you, however, come across any questions in the next day or so, you are welcome to email it through to Melissa, myself, Moshe, or Janine. Post it on the Facebook chat. I've never been so active on Facebook in my life. so we're there to support you guys. So pass those messages and questions on, and we'll be happy to see how we can help. So everybody, thank you so much for your time. I think it's been quite an informative session today, and I enjoyed the conversation with all of you. So enjoy your day and stay safe. Bye-bye.